Well, hello everybody. This is Price Headley coming to you with another Big Trends weekly market outlook as we sit here actually on Tuesday morning, June 30th. Just had a little bit of a markup yesterday as we're getting into that window dressing phase on the last day of the second quarter and the end of the first half of the year. Looking at the markets right now, we've got the QQQQ NASDAQ 100 Trust here. You can see we've been in a nice little uptrend. We're bumping right around the 20-day moving average, which is the midpoint of our 20-day acceleration bands here in red. You can see that we're getting basically some issues happening in our view based on the fact we just went back over the 80 threshold on %R, the Big Trends way, using the 30 bar %R period here from our Trixie charts available on our bigtrends.com website, and you can see that we're right back to the overbought threshold. That makes the high from yesterday, June 29th, very critical, and that high in the Qs was 36.75. So we're going to watch that real closely as the markets are trying to open up a little bit here as we start Tuesday morning. But bottom line is that what matters is where we close. So right now we'd say that's a relatively overbought top of the trading range rather than yet the start of a new uptrend. So we're cautious here. Also, this MACD I include on here, you can see that the last MACD peak after the recent highs right up near the upper 20-day acceleration band here back a few weeks ago basically was coming with a lower MACD there in green than what we saw at the previous peak. That's setting up what we call a bearish divergence. It means that MACD is not making new highs on the last new high, and you can see of course it's tailing off even more here as we try to bump back up again. So these things make us very cautious on the market here, and frankly wouldn't be surprised to see a bit of a give back off of that as we head into the rest of this week. So keep an eye on that. Obviously today could be the potential for some markup window dressing, but the bottom line is that we have to recognize that that's likely to be a situation in which we want to stay cautious coming into the start of July. Now if we look at the VIX, always pays to keep an eye on the volatility index as well as the other tools that we use track. Let's first track the Dow and the SPY just real quickly, just to show you how those are shaping up as well here. So we got the Dow Diamonds. We pop that down here, and you can see actually it's been on a relatively more negative tilt here. You can see %R is broken below the midpoint 50 level, and it's basically started to pop back up a little bit. We're still in this trading range, but with a little bit now of a downside bias on the Dow compared to the Qs having been relatively firmer. So that tells you that the industrial components are acting relatively weaker. Not a great sign for the economic outlook when you see that happening and the Dow starting to show this kind of negative leadership. We last saw that happening right back here late summer before the fall plunge. And so basically you can see that right now we're playing it very cautiously. That's actually, we're looking at also Feb and March through that phase too. So concerned about the market, be cautious. And also let's look one more time at the SPY real quick here. We've got SPY, the S&P 500 index. And you can see just real quickly, this is now bumping back up into the 20-day moving average as resistance, sitting up here about 93 on the 20-day moving average. The SPY, remember, trades at 1/10 the value of the S&P 500, and so the idea here is that we're seeing some new resistance. What was support at the prior couple of 20-day tests now becomes likely resistance up here near 93. Not coincidentally, we're getting a test back just over the 50 level on yesterday's highs. So that makes the 29th high there, as you can see here, happening at 92.17. And actually yesterday's high 92.82. So basically right into that 93 area is resistance. I wouldn't expect to see a close above that as we look at these key charts here. So the bottom line is that it definitely will pay to stay a little bit more cautious. Definitely looking for a little bit of follow through on the downside before we can get particularly negative on this environment. Right now it's moving from the prior bull trend, which ended when we broke down, as we mentioned last week, on the on the S&P, that told us it was time to bet on a trading range. And right now we just touched the lower end of that band, then bounced. So bottom line is that we're expecting that this is a bull trend turn into a trading range, now a trading range that will probably eventually evolve into a downtrend. But never want to try to bet on the downtrend developing too soon. Want to rather play it much closer to the vest and say, okay, be cautious, lighten up on any bull positions, tighten any stops on any remaining bullishly oriented positions, and be watchful of new opportunities on the downside. So looking ahead, wouldn't be surprised to see an eventual test back to this lower acceleration band on the SPY around 88.9, roughly the 890 level on the S&P 500 index, the SPX, or 89 on the SPY as a next downside target. So that's what we're expecting within this kind of choppy trading range. Obviously, a break of the lows that happened back here under 88.85 would indeed be a negative sign, and then you have to go back to the prior support, which is right down around 88.25, 88.5. So literally a break under 88 will really be a critical area to watch. You can see you go all the way back to prior support right there, about 87.95, so literally right around the 88 line, a huge line to watch in the longer haul. So we'll be watching that very, very closely. For now, playing it cautiously, but also not trading as heavily while you're in the middle of chop, waiting until you get the confirmed breakdowns. Then you can get more aggressive with your particular option purchases. Really, these choppy environments make for much better spread trading environments like we do in our advanced option strategies, where you can benefit from choppiness and time decay while you wait for that next major trend to develop. So that's the outlook coming ahead, and hope you have a great week ahead and a great holiday weekend. We'll look forward to seeing you back early next week on this weekly market outlook video update. Thank you.